over the years, especially following the GFC, was policy coordination amongst the global central banks, the BOJ, the ECB, the Bank of England, the Fed, even to some extent the PBOC. And what are your thoughts on policy coordination going forward? What systems are in place?
In a crisis situation, there needs to be obviously a lot of deep knowledge about what's going on in economies around the world and coordination where it's appropriate. So I think of the swap lines, the dollar swap lines were clearly a key in keeping dollar funding markets working. In peacetime, in times like today where we're not in crisis, we do keep in very close touch with central banks around the world, and I think that's a very healthy thing. Coordination, the first step is transparency, and we all try to be very transparent so that our moves are well understood. Coordination, I think, really arises in the state of crisis, and so we don't actively coordinate now, but we try to explain ourselves to the public and hence to each other.
All right. One of the negative of having an electronic device that people can upvote questions is that there's a question that's getting upvoted about how monetary policy and climate change inform one another. Maybe I'll read the question directly. But any thoughts on that?
Sure. So climate change is a very important issue in my way of thinking for countries and governments to deal with around the world. As I said, it's an absolute first-order issue as far as I'm concerned. Less obvious is that it's a first-order business for central banks. I think the main responsibility for climate change now, dealing with climate change, resides with legislatures and particular agencies that are focused on the economy. However, I think we are learning that financial markets and financial institutions that are important, transmission into the economy of policies of various sorts. And central banks around the world are starting to think more about how and whether central banks should play a direct role in climate change. I'd say we're not there yet. We're not in a place where I think we would conduct monetary policy in order to deal with climate change type issues. But there's a lot of forward thinking and analysis going on. Of course, in bank supervision, we already supervise financial institutions in areas that are subject to severe weather, which is possibly related to climate change. We already require them to have plans to deal with severe weather redundancies and resilience to what can happen in for example, a hurricane. So in that sense, it's already kind of endogenous to our supervision work. But I think it's an important work, and we're going to be following carefully developments around the world on that.
So a lot of questions about the repo market, as you're probably not surprised to hear. And essentially, the question that is percolating through this room and the financial markets is, what is the repo market telling us? Why are the banks in what we're seeing in terms of the spikes in the repo markets, the need to do some intervention from the Federal Reserve, and is the Fed almost coming back into QE, or would you describe this intervention as something different?
Let's start there. This is not QE. In no sense is this QE. This is nothing like it all. This is I'll come back to that point, but I really wanted to make sure.
Yes, I
didn't want to forget to say that.
Right.
So if you go back, the quantity of reserves in the banking system peaked at about $2.8 trillion at the end of 2014 when we finished doing quantitative easing. And then due to increases in other reserves and also just to the increases in non-reserve liabilities really declined. While we held the balance sheet constant, reserves were actually shrinking down to, I guess, about $2.4 trillion when, under Chair Yellen, we began normalizing, actually shrinking the balance sheet, letting assets run off very, very gradually. So that went on, And then in March of this year, we tapered that. And in, I guess, July of this year, we stopped. And I think through all of that, we were moving quite gradually, and we were carefully talking to the banks and doing surveys and trying to assess what would be their lowest comfortable level of reserves, add all that up, and then put a big buffer on top of it. I think doing that work, checking it twice, led us to, and also watching the markets, led us to think that we were still probably away from a minimum level of reserves. And let me define what that is. We've committed to a system of ample reserves, and that means that we'll be able to conduct monetary policy, keep the federal funds rate in its range without resorting to open market operations all the time. So I think it very much looked like we were still a bit perhaps above that until September, when we found that we probably weren't.
Yeah.
And so we found that out, and so there are a number of explanations. It can be that reserves are just kind of less flexible. The quantity of reserves are less fluid, less flexible in the markets than we had anticipated. In any case, there are a number of possible explanations, and I think a plan to get us to our goal is going to need to take all of those on board over time. So we're working on just such a plan, and as I mentioned, we'll announce it soon when it's ready. It's not ready yet, but we're very much making great progress on that. And the idea will be to add enough reserves back in so that reserves will, of course, move up and down during the course of the year, and they'll also go up over time as the balance sheet expands. But reserves move around quite a bit during the course of a year. They have to be at a level so that their lowest level during the year will not be below the level that's needed to allow us to operate in an ample reserve regime. And we think that level might be at or maybe a bit above where we were in early September of this year. We think that. All of this is, though, uncertain. We're still learning. So we'll be adding reserves back in when we announce our plan to get back to something like that level. Of course, we'll continue to use open market operations to the extent we need to for as long as we need to. The main thing is this is very important for the financial markets, and we will do what we have to do to secure the transmission of monetary policy. It doesn't actually, as long as we do that, it actually doesn't have much implications for the economy, for financial conditions, or for the people we serve.
Wonderful. Great. And I think that they're taking cards. Is that right? Yeah. Okay. If folks have cards.
But not QE. Did I mention that?
Not QE. You did mention that.